All right, newbies, welcome to another lovely edition of how to set up your charts. Actually, the first edition, how to set up your charts. So what we're going to do here is we're just going to go through a quick little step-by-step thing on how to set up your charts. The first thing you can do is go in the top left corner, select new chart layout. Here I've got a new chart. Now we're going to set up a BTC chart. So we're going to go to BTC, USD, and then you can go ahead and pick any one of these. Now I don't recommend picking MEX. I don't like picking MEX. I would pick one of the top exchanges. Bitstamp is good. Bitfinex is good. So I like Stamp a lot because Stamp does give me the ability to. It has a really good call sign with the scalper, the beast scalper. So I like this Bitstamp. Also, Polnex is really good if you are using the beast scalper. And all you have to do is just go up into this top taskbar and just start typing it in. You can go down. There's Polnex right there with Tether. There's Phoenix. So I'm just going to kind of do this one with Stamp. So we're going to stick here with our Stamp chart. Now, one of the first things you want to add is I like to use my moving averages. So I have this in my favorites, but you can also go, you're just going to type in, for members, you're going to type in VAMP. Nope, not VAMP, VAMP. And there's the VAMP 6 simple moving averages right there, right? You're just going to give that one little click, and it's going to populate everything for you. Now, you have the ability to choose the size that you want of all these moving averages. You just go up here to the little format button right here, click on the format button, and you can make them smaller. Just go ahead and click, 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 like that. And then they're all smaller, and this can, unclutter your chart a little bit. Just depends on how well you want to be able to see these moving averages, right? The moving averages are super important, right? And I will make a video later on and describing how to use the moving averages. But for these moving averages, you want to make sure you have all these in place. The key charts I like to have set up, if you're going to use the scalper, is you want to have a 6-hour, 12-hour, 4-hour, daily, 3-day, and weekly. And this is those are the key charts that you're going to make sure you're always keeping an eye on, right? And you can switch that right here. Now, you have to get the higher packages of TradingView in order to be able to add and subtract days and hours and everything else. And what you do is if you want to add, you go down to the bottom here. You just select in how many minutes or days or hours. Then you select the days or hours, and then you just click add right there, and it'll let you add a whole new chart, right? So a lot of people that like to use a scalper, they like to have 23 minutes, and then you just click add, and then you see it's 23 minutes there, okay? So it's pretty easy to add and subtract different values on this chart. Now, the key ones that I use are the 4-hour, right? 4-hour, 6-hour, 12-hour, 1 day, 3-day, and weekly. And these are all of my favorites, and you can peg them up here in the top corner, and it makes it a lot easier to go back and forth here, so you don't have to be searching for them. You don't have to drag the taskbar down. Got that? Right, now you still just go up here, you drag your taskbar down, you can get down to the 2-hour, the 15-minute, or whatever else you're looking for. All right. The other thing is I like to be able to set up my my indicators again. So we're going to go ahead and set up our next indicator, which is going to be, I like to use my RSI. All right. Now, for newer traders, you got to be really careful when you're adding these other indicators. So I'm going to show you, these are the ones that I have. These are my Bollinger Bands, my Ichi Cloud, my moving averages. Now, I don't use this one anymore, so I'm going to get rid of both of those. My RSI, you've got your Stoke and your Stoke RSI, right? Now, I don't really use the Stoke RSI anymore. I do use the TD sequential. I do not use this. I do not use that. We're going to get rid of all those. All right, there we go. So these are the ones that are the most important to me. Now, on your initial chart setup, you're going to want to have TD. So there's your TD indicator. So now on your TD indicator, there's some really fun things you can do into your TD indicator. You can go into your thing, into your formatting, and you can actually select to keep or remove certain numbers. So like in one of my charts I have a bunch of numbers removed because of the 1, 3, 5, and 6, 9 setup. So I do have a sequential setup that I did make a video on, and that is, I believe, posted in the members area already, and it's how this turns around on specific numbers, and it likes to turn around on specific numbers, okay? So we are going to add our TD. So there's our TD, right? We're going to bring ourselves up to this 12 hour. Now, I do and do not use the volume, right? I do and don't use the volume. So you always want to have the volume available. And the volume is really used best when you zoom out on your chart. So I like to use my volume when I zoom out. And here you can see that as you zoom out, you can see the descending volume that we have. Like the volume just keeps going lower and lower and lower. And this is where you can get a good idea of the overall volume of the market, right? So this is a good indicator to have. But I always like to, if you don't want to have your chart too cluttered, you just give it a little blind out right there. This is how you show and hide, so you can take off. There you go. Moving averages off, moving averages back on, so on and so forth, right? So there you go. So now these are the two most critical things that I like to have on my chart. The third one is I do have my beast scalper up, right? So there's your beast scalper. Now you can go in your beast scalper and you don't have to have it look like this. I like to get mine down to where all it does is it literally looks just like a, so I go in my short, red, long, green. I get rid of everything else because I don't want any of this other stuff clouding my charts up. So you could keep these on right here. These are basically just tell you what particular candles meanings are. These are candle combo setups or individual candle meanings. So we're just going to kind of keep going through here, keep removing everything. You'll see things are just going to keep disappearing off the chart behind us. All right. And it's going to keep going. Okay. All right, let's see what we got here. So we're going to have our short red and green. And then we're going to go for inputs. There you go. So now this shows all our shorts and longs. Okay, so we're going to save as default. And okay. All right, so here we have now a very basic ripped down chart structure. Okay, and what you're always looking for is you want to have a combination. I always look for four. I'm looking for four signs, bull or bear, right, for confirmation. Okay, so you want to have 4 or 5 signs, 4 signs, at least 4 signs. Now, if I have 4 bearish signs, I have 1 bullish sign, that's okay. This, a 3 out of 4 ain't bad, but I'd like to have 4 out of 4 bearish or bullish signs before I confirm a trade, right? And there's a lot of ways you can do this. This chart offers a lot of great historical support and resistances. So you see these lines right here with the green, and then you've got red ones also buried down in here. Now these are historical support and resistance zones. So whenever you're charting, one of the main things you always need to remember, and this is such a massive piece of advice that I'm going to give you right here, and it is always look left. Right, so a huge key to charting out your charts is always looking left, right? And not just one of the issues is people just get right down in here and they're so absorbed into this little area that they're not looking at the bigger picture, right? And this is a common mistake with a lot of traders, right? Where they get so trapped up into the micro, they're not focusing on the macro movements. And the macro movements are really what I focus on because I'm a swing trader and not a scalper, right? So I am more of a macro trader than a micro trader. And what you need to do is you need to look back through history and you can see look, this is now everything above is resistance, everything below the price action is support. So if you go into this chart here, we can easily identify, and you're going to come over to your toolbar section on the left side here. You're going to grab a horizontal ray, and you're going to just start, boom, look, there's one right there, right? There's another red line right there. And there's another, let's find another one. So up there. So you see how easily you can just go back, and now you got to make sure you scroll all the way back. Now these are super easy support and resistances. Now the key is to remember is that this is only on the 12-hour. Now as you dive in, those lines are going to change, right? Look at here. So those lines will adjust themselves. So there's a new one right there. Okay, and look, there's a new one right there. Got it? And there's a new one right there. So this is how you can identify support and resistance clusters, right? You can identify this as support and resistance for the price action, right? As you're going to move along historically. One of the other things you can do is you can go ahead and look for bands of consolidation. And so we're going to back this way up, right? And a band of consolidation is a compacted area of a lot of price movement like this. But you want it to correspond, you want it to show that as it moves along through time, right? So like, let's look for an area. So here's a good one. So look at this area right there. See how this area had a lot right there, right here. This area had a lot of corresponding price action. And again, right there. This area had a bunch of corresponding price action right here. So you can see the tops, the bottoms, all of the wiggle room that occurred around in here. This is an area that had a high probability of a turnaround simply based on the past, right? So you see, look, you had a short call here, so the peak there, you had a peak there, you had a bottom here. So there's a lot of volatility right inside of this area. And then if you want, you just kind of keep pulling it all the way back, and you can see how volatile and in what area that was, right? So you'd stretch this down. There's those bottom wicks, top wicks, bottom wicks, bottom wicks, top wicks. So you get a good idea that this area right here had a lot of support and resistance. And that goes to show as you break down lower here, right? As you break down into this area, this is where you get to be an area of concern. Now, it's easier to do this the higher you go up, right? The higher you go up in your time frame, it's easier to set this up simply because you have less, you have heavier support and resistance zones the higher the time frame you go, right? And now look at this zone right here. So we're going to take this same thing, we're going to pull this down right here. Look at this area right here that we're in, and just banging around in here like crazy, right? So you got a lot of stuff just banging around in here. And the challenge is when you go back and you look historically, right? You look into this area right here and you see that falling out of here, you have this one little cluster of support that's way back here. But other than that, the next cluster of support is lower down here, right? And this helps you establish targets. Okay, so this is what you use to establish your targets. And if you were to look at your chart, you were to look at this and say, okay, if I came down to this area right here, all right, we're gonna change this section. We're gonna go over here. So we're gonna say this is kind of an orange area, right? This is orangish because it's kind of got a little support. And then failing that, I mean, there's just no support right here below, right? So you come down into this orange area, and I can go like this. Fill us in a little bit. There it is. See, this orange area has some support that plays out in it right there. A lot of support in this area, right? And then failing that area, there's just nothing right here. So there's just this kind of like just blue sky. So you can see that there's just blue sky right here in this area, and we're going to go like that. And there's nothing. You see this candle's just a drop, right? So this area, this 6K area, is super important. That at 5500 area is, you can see how detrimental this is to the price action. You might just stretch that out just a little bit more, maybe like that. And this is very critical to the price action of Bitcoin. So you can go ahead and you can look at, now I recommend you looking at having a longer term chart like this. You know, and this can be a weekly, a 3-day, a monthly, whatever it is. But look at how accurate the beast scalper is, right? Long, short, long, right? All these good calls on the beast scalper, right? Great calls by the beast scalper here. Now, the scalper is used for calling scalps, right? It's not really, you should use it as an indicator, right? It's a very accurate indicator, but it's still an indicator. And like the moving averages, right? So take a look at this. This called the short. Now, the overall, this was a great call, right? It was technically a delayed call, and we're going to get into that in just 1 second on delayed calls and delayed indicators. And let me just clear this stuff up real quick. All right. Okay, so one of the things we're going to talk about is delayed indicators, right? And moving averages are a delayed indicator, okay? So you want to also be really aware that when you're using your moving averages, this is one of the greatest ways that I trade, and you got to understand that using your moving averages, you use them as a delayed reaction, right? So also it depends on how high or how low or how close it is to the price action. So there's a lot of variables go into using the moving averages as both bearish and bullish indicators, right? So this is one of the reasons you have all of this set up. So one of the things you always are looking out for is you always want to be aware that the strongest indicators are your 7, your 30, and your 50. Okay, so the 7, the 30, and the 50 are my key, these are the key ones that I use for my bullish and or bearish crosses, right? And when I talk about bullish or bearish, you can talk about also the terms are death cross and golden cross, right? And when you use a death cross, that means that the cross action is higher than the price action. A golden cross is where the cross is lower than the price action. Right? So here you see this is a cross under, this is a cross over. Okay, so this would be a bear cross or a death cross. This would be a golden cross, right? Now, as you are using your moving averages, you have to understand the closer it is, sometimes being too close is bad. And being too far is bad. So there's a lot of different variables that go into using your moving averages. But just having your moving averages set up is great because your moving averages work as both support and resistance. And that is kind of the key behind this 128 line. And we go through this in one of my other videos, and it's in the members stream. So this 128 line should be used on the daily. Right, and you can see that how well this 128 line has worked as a support and resistance for us here as the price action has played out over days, weeks, and months. Right, and you can follow this yellow 128. I call it the yellow brick road. That's why it's yellow. And you can follow this all the way back, right, to the beginning of time. And you can see all the way back, the last time we were above this, we ran above this for almost a year and a half, almost 2 years. We've been above it, all bullish. And this is a great bullish and bearish indicator. Right now, our price action is below it. So what we're doing is we're just constantly watching the action of this below here. Okay, so we're watching the action. We are bearish as long as we're below the 128. Now, if you look up at your 128, you see that it's angling down. Okay, and you can see on the daily, it corresponds with a resistance point of 7,084 or at 7,086. And so this would be your moony moon if this thing took off. This is where you'd be looking. Now, it's already tested the 128 and it got rejected. So this is a great thing about moving averages, is you can see that as these moving averages play through, that they actually do work as support and resistance. Now, they might not work as support and resistance on one particular timeline, but as you scroll through those different timelines, you can see exactly how they move, how they work as support and resistance levels. So here you see the 30. Watch how the 30 just cupped this, rejected, 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 rejected. It worked as support all the way along, worked as support one last time, and the price action finally fell through it, right? Came over here. It worked as resistance a first time, worked as resistance, and then failed, and you got the breakthrough, right? Broke right back through it. So you can use these moving averages also as targets, and that's one of the things I like to do, because I do like to see them bounce off of these or get tested on these moving averages. The moving averages also allow us to look at where potential bottoms and tops can be in any one price action movement on any price line and any price timeline. So here you see we've gone out to the weekly, and the weekly is a really good guide to where the possible price line tests would be on the lower and the upper side. So right here you see I've got a lot of support right above us on this 7MA. Now the higher you go on a time frame, the heavier the support and resistance is of all of the moving averages. So if you go all the way down to a 1 minute or a 5 minute and you're using these moving averages, they're just going to get blown through like crazy, right? It's you know, and that's just what happens on those lower time frames. On these higher time frames, these moving averages are much stronger, and you can clearly see as this 7 is woven its way, rejection, support, right? Rejection, support, worked again as resistance. So it's rejected. There again, touched it again, kind of moved along, perfect touch, and now we're below it. So if and there was a price action pump right here, on the weekly, you would be looking at your support right here. Now, you've got to keep in mind that this is continually moving down, and you can look for a wick through, right? So as time moves, these moving averages move, and they adjust higher or lower. Now, hitting a moving average is something you do need to watch out for, but what the other thing you need to watch out for is hitting a moving average and then watching to see how it acts as support. Here you see this got wicked through and rejected. Came up, got wicked through. This was rejected because, look, this price action ended up dropping all the way down here. So this candle closed higher, but when it reopened, it had fallen all the way down, so it was rejected by this 7 moving average right here. And then eventually it broke through the 7 moving average, and it tested it once, tested it twice, and finally got through a third time. Here, tested it once, it bounced up, it tested it again, and then it finally broke through. So here, tested it once, tested it twice, finally broke through. Here, just broke straight through. So you need to be able to look at these moving averages, understanding the fundamental support and resistance of these moving averages. Now, as you see, we have never on the weekly tested these lower moving averages here, right? And this is something that it is expected. I am expecting this to happen. I'm expecting us to touch one of these lower moving averages down here before I am satisfied that we have found a bottom, right? If you look up here on the weekly, all we've done is played around with the 3 fastest and easiest moving averages that we use, right? Our blue 50, our white 30, and our orange 50. Sorry, blue is 7, white is 30, and then you have the orange is the 50. So we have never even touched one of these higher moving averages down here. So you get your 100 and your 200, super deep. Right, so there you go. So now, one of the things we want to go ahead and is take a look at is on your moving averages. You need to also understand that just because a moving average is bearish doesn't mean that the price will stay bearish forever, right? Because your indicators have to set and reset, and that goes on to your next step. So if you want to add in your RSI, you're going to add your RSI in. Now, so here's our RSI. You can come over here. I always use the standard. I do change this. I make it orange. Okay, now even as you use your price action here and your moving averages, you can also use your RSI as another indicator, right? And once again, the key is always look left, right? So if you scroll out here, you can get a really good idea of where the potential is for this to go, right? So you can look, I just dropped this line down here, right? This was the lowest week. Well, there's the lowest weekly week, but this was the lowest weekly we had. And then you can start to march out the same exact thing. You can start to find support and resistance levels, right? So if you go all the way back here, see, kind of like, look at there's that taps along there, taps along right there, taps right there, wick right there, kind of there and there. Same thing, work to support here. So now if you were looking at this weekly chart, you would say, hey, this is my support. 42.49 is my support level. We've had a hard time breaking below this, right? This is kind of where we're at. We can even adjust this down just a little bit right there and see, all right, so there, perfect touch, perfect along there. 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 10. So you just really good, and we're going to just kind of leave that right there. So 41.29, right, is where this is at. Now, what you can do is you can always set up an alarm. So to set up a trigger alarm, you go over here and you click that. Right, it then set up your alarm. So you now have an alarm that's engaged right there in case this RSI breaks through to that level. All right, now this is super easy because this will help you to pull a short trade and or a long trade, and you can do the same thing on the high side. You can say, okay, where would a breakout be? And you're going to kind of look in here and say, all right, where would I be looking for a breakout? And I would have to say kind of a breakout area would be there, right? So this corresponds with here, that wick right there, nothing, and then you came all the way over it. So there's a wick right there, there's a wick and a rejection, and then a wick there. So I would set that as my breakout alarm, right? So now I clicked it again, I set up a second alarm, so you now have two alarms that are set right there. See the dotted line that goes all the way through? So what I can do is I can grab my red line if I want. I can change my red line to a different color. And I now have a pretty good example or an idea of where a bullish breakout is, right? Now I come on over here, grab an arrow, and I would expect if we broke out of this that we would be breaking bullish, right? This would be a bullish break, right? If we break lower than this, this would be an extremely bearish break. But right now we're trapped inside of this channel right here. So we're inside of a channel, and you can see that this channel is pretty clear, right? Top to bottom, good channel consolidation right there, right? There's a bottom with lots of bottoms and tops, right? Some more tops, another bottom, another top. So keeping this in mind, this is why you want to have higher time frame. This is why you want to have a lot of higher time frame charts that are available to you at any time. You know, you always want to have a higher time frame chart that's open so that you have the ability, I'm going to put my volume off, so you have the ability to get a bigger snapshot of what is going on. Okay, so now once again, let's look into this chart. The first thing I see is there's our support right there, right? There's our support right there. Okay, so let's move on to one more thing. So there, now we've got some moving averages, we've got historic support and resistance points, we've got RSI added, we've showed you how to set up your alarms. Now, last one thing we're going to go into here is we're going to go into patterns. And patterns play a huge critical part in charting. So we're going to drop this wedge here. Okay, we're also going to drop a wedge here, and we're going to, this bottom is a little bit harder here, So what I want to do, the first thing I want to do is I want to set up a channel from here to there. Okay. And then I want to set up one more from here to there. Right there. Okay, so now on the weekly, we see there, take a look. Body, body, got wicked through, body, body, wick, wick. So another wick right there. So you have a really good setup now for a multiple, you have 3 separate trade trends right here, right? You have a very good picture that you've created of a channel. And exactly like this right here, right? This is exactly, and you want this to correlate, and you see how this correlates with this, right? So now you can look here and you can get a correlation between your RSI, right, on this top side up here, and the bottom side channel. And you also get that same correlation now with your big charts, your channels you just set up there, right? So there's your channels. Now the other issue is if you look at this RSI right here, this 43, it's a little on the low side right here, the channel. So this would also tell you that you might go ahead and put in one more horizontal line, and I would do that one right there. Right there. We're going to turn that blue. Okay. So why did I do this line right here? Right? Why did I add that line right here? Is because I see that we're really pretty close right here. I mean, we're pretty darn close to breaking south of this channel. And what I want to do is I want to come over here and make sure, hey, okay, I don't want to miss anything. And I don't want to put this arrow in the wrong spot. I want to make sure that, hey, this arrow would possibly correspond with something here, right? With something right in this area. I want to probably say it's down right here. Right, so there you go. See how that works? So now this gives me a good corresponding target in which I am looking at in order to make a good trade, right? So here, this tells me now as I dig deeper into this chart, first thing I look at, I say, oh, look, there's another wedge. Look at right there. So now I have another wedge target that I can look at. And I know this starts to get messy, people. I know this starts to get messy, but you have to understand the more information you have on here, the better. So now I take my arrow and I move my arrow up right there. Right? So I'm looking now, this looks pretty good because if this fell out here, right, I would be looking for something inside of this box here that would correspond with a break. Now, once it broke, once I see this RSI break this and close lower than this alarm setting here at 40, I know that I'm going to have a good corresponding price action with that. So if the price dropped to here, so if our price action actually went to here, and as soon as our price got to there, this arrow, the RSI got to here, right? I would know that the second it falls below this, we are limited support below this, right? So you look back through time, and the last time it broke through, it just died. then it broke through again and died, right? So you have this ability now to look back into history, into the past, and see what happens when it does break through here. And that's a sharp dive. This is a sharp dive. This is a sharp dive. This is a sharp dive. Even this small action right here is a detrimental dive in the price action, right? So you got to remember that could be a 3, 4, well, percentage-wise, it could be a 20% dump in price action. So now that you've got your ability to look at patterns with your trend lines, you also have you set up historic support and resistances, and you've gone back here on the weekly. And you have your RSI now that corresponds with this existing price action, and you have historic support and resistance for this. Now, the important thing to understand is with channels, just like this, right? With channels, you get banging around, right? So that's where you come in with your A, B, C, D, E, right? A, bang, 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 right? Now, we haven't touched down here, so there's, to me, says there should be one more lower touchdown here, okay? And this is something I'm looking for. I'm looking for a price action that's going to touch down here and give me a corresponding. Now, you're going to look back to your left, right? And if you're going to start to say, okay, where would this fall if this would fall? You're going to have to say, how do you line up this, this, and this? And this is kind of where you come back here. And we're going to drop another line. So your first target's going to be there. I'm going to make this, make that orange. And then our second target is going to be here. Right? So now you have the ability to put your D there or your D wave there. Right? Or anywhere in between. So this would be the D wave zone for our D. Okay, the other thing you want to look at, I'm going to start to pull this stuff off here. Okay, I want to pull that off. The other thing you want to do is when you peel inside of this, you have to understand that there's patterns that play out, A, B, C. So everything is done in 3s and 5s. Everything is a repeating pattern of 3s and 5s. So when I look in here, I say, okay, Y, A, B, C, right? And then I go, same thing. This goes A, B, C. Got it? Everything is an ABC. If it's not an ABC, it's a 1, 2, 3, 4, 5, right? A, B, C. You can do it every single time. Stands out pretty clear. This is probably A, B, C. Right? So you always have these massive ABC movements. So if we look in here, we haven't seen an ABC movement yet. So we're kind of looking for that. Right? This would make a good ABC movement right there. This would be, all right, this is good. This looks good. So this right here, you can't make an ABC out of this. It just didn't work. Right? It would be harder. You could, okay, A, B, C, and that could be your ABC, but that's a little challenging. That's not that much of a pullback right there, right? Like here, A, this is a substantial pullback, B and C. Okay? So A, B, C. Right? So this is this is what we're looking for, and this is a good way to set up patterns. Okay, now a lot of people say, hey, the bull run is over because we have higher highs, right? So because we have higher highs, one of the things we can do is we can go over here and we can say, okay, that's fine. We can look and see if that's true. All right, so first thing we're going to do is we like to go into these higher time frame charts right here, these weeklies, and see, have we closed higher? So the answer is no. So people say we've closed higher highs. That is not true, right? So we have proven that we've broken that because this is lower than this. So our weekly close is lower. Now, if this weekly close would have been higher, then you could clearly make a case for a bull market here, right? If this weekly close would have been higher, you can make a good case for a bullish continuation because this would have been lower. Now, yes, this hasn't wicked out far as down, but this is also not over with, right? This is clearly not over unless this thing takes, the only way you can get out of this is to break over this wedge. Actually, I take it back, is this wedge and this price action. So you need to get a daily close that is above this. That would take you out of the bearish market, as you have to get a close over this, right? And that would say, okay, now you have a bullish. You've basically flipped the market into more of a bullish market. Now, how long that would be, we'd have to start and chart over at that point. All right, so this gives you more good ideas of how to set up. Now, you also are going to use your wedges, and these are your trend lines. These are trends. You're going to use these trends as support and resistance. So you're going to also use these, very critical. So look at, if I would have started back here, I would have been able to pin this perfect, right? Now, when this comes down, this will touch here, and you'll see it'll do it absolutely perfect. Now, inside of a wedge, inside of a pattern, inside of a trend line, there are more trend lines. And you can find those if you really want to dig deep down in here. You can kind of say, okay, there. All right, so, okay, there you go. So there you go. So there's, look, 1, 2, 3. So now, if I were to dig deep into this thing, I would say, okay, if this thing does bounce up, where would my target be? And I would be looking to tap out. Now, on the high side, you're going to have to get in here. On the high side, we're just going to move this line back a little bit so we can scoot around. On the high side, there would be your high side line, right? 65 and change right there. So you'd be looking at 65 and change for your high side using this wick and this wick. And then you still haven't found that third topside wick right there as a corresponding wick. Now, if you adjust this lower, you still kind of have a tough time. You see a good resistance line here, though. So this line has worked as resistance, but it's still not exactly a home run. I wouldn't get all squishy over that one right there. All right, let's take a look at another line. See if we can get this to line up with anything, and nope. And oh, there you go. There you go. That works out pretty good. Okay, so now the top of this candle, the top of this wick came down, bottom, top of that wick, top of that wick. So there you go. That's pretty good. That looks pretty good right there. And that would give you a corresponding top of 6,500. Right? So this would be looking for this candle to retrace 6,500 points. Now, you're also gonna, as long as you have both these charts open, you have a good idea of when the breakout occurs, and you're just gonna be watching for that breakout with your weekly RSI chart. Now, this breakout is a lot higher to the top side, right? This is a lot higher. I mean, just looking at this price action, just to get all the way up here, is really substantial, and you can go back and you can look at this. So if you take a look at the top of this price action candle, it corresponds to the top of this wick, you pull yourself back one, you can see that just this movement from here to there was a total price action of 1,000 points. So just this little run from here to there is 1,000 points. So that 6% run up, that 3% run up on the weekly chart was 1,000 points. Okay, now it doesn't always have to be like that, right? And this is kind of where bullish and bearish divergence comes in, and that's something we'll talk about on another day. So this just helps you get your charts set up so you can initially start using the tools that we have set out for you guys.